Sibanye Gold has acquired the West Rand operations of junior miner Gold One International. The company said it would acquire the assets in exchange for around 150 million new Sibanye shares. That represents almost 17% of its share capital. Earlier, Chief Executive Neil Froneman spoke to Tamisha about the deal.
There were a number of reasons for the transaction. I think first and foremost, our assessment is that it's value accretive in earnings per share and cash flow per share. We acquire a number of operating complexes, one being an underground operating complex that produces 240,000 ounces a year over the next 5 years. That's a material increase to our production profile. The other one is that we acquire all the skills and a surface operating business, which is a key ingredient in our West Rand tailings retreatment project. I think certainly last but not least is the shareholders that will be holding our shares is a Chinese consortium. It's a consortium that I've had a lot of experience with, and they are very supportive of our strategies.
Why don't you give us a better understanding of the role of the Chinese company, because as you've mentioned, they've got quite a significant stake.
Well certainly as initially a 17% shareholder, and I suspect they may want to increase that stake. They are a significant, in fact they are single largest shareholder now. They're also entitled to 3 board positions. That's in proportion to their 17% holding. They are familiar with our strategy, and they're supportive of our strategy. So they certainly will have influence, but more importantly, we have seen in previous relationships with them, they have significant access to capital. And as you would see, Sibanye has a number of projects in the pipeline, and in fact we do see consolidation in the longer term as one of our strategies.
But what does this transaction mean for Sibanye going forward?
Our primary focus is we need to get the assets that we already own to generate very significant amounts of cash flow so we can return those to our shareholders. I think our 6-monthly interim results clearly demonstrated that we've made huge strides forward in re-establishing those operations, and that's our primary focus. Consolidation is somewhat secondary, but where there are commercial merits, like in this case, these are assets that border our existing operations. We see operational and infrastructural synergies. In fact, we've done a very conceptual review of that, and we can see over the next 4 to 5 years, something like 440 million in infrastructural and operating synergies. That makes commercial sense in terms of consolidation. In this case, bringing all the surface assets together so that we can build this tailings retreatment project is essentially our 5th mine now. Those are our primary focus areas. Consolidation for the sake of consolidation doesn't really make sense unless it's driven by these type of commercial imperatives.
You're talking about a drive for consolidation and leveraging of synergies. Last week you made an announcement that 1,600 employees could be facing retrenchment. Are you still going to be forging forward with that, taking into account the transaction?
No, it's unfortunate, but this transaction is mutually exclusive to the 189 process that we have to run. We have a service function within Sibanye that needs to be streamlined. This streamlining is important in that it makes our entire business more efficient, more profitable, so that we can invest in the development of our business. So no, this is not related in any way to the 189. Unfortunately, the 189 process still has to go ahead. We don't really require additional service staff with this transaction.
We know about the benefits of having this transaction go through, but what additional capital expenditure will you need in order to ensure that this project is successful?
The pre-feasibility study that we've just completed is currently being reviewed, and of course we will provide more detail to the market. But At this stage, we would implement this project in a structured or a phased way. We think the first phase would require something between 2 and 3 billion rand.
Quite a number of loose ends that you still need to tie up. One being the DMR. Have you heard from them, and what's the status on that? And of course the permits. What type of permits do you need exactly?
All right, well, for the transaction, there's a number of regulatory approvals required. There's Competition Commission approval, so there's very little we can do until that process has happened. Clearly, the DMR has to approve the transfer of the assets. There's a change in ownership. As a committed South African company, being Sibanye, I don't see why there would be problems with that. In terms of permitting for the tailings retreatment project, there's a number of licenses we need for new plants, water use license, but none of them are really issues that are on the critical path.
You're quite bullish on uranium, especially taking into account that nuclear energy is big in China. Tell us about your prospects for the business looking at the uranium market.
What is very important this year is that the highly enriched uranium conversion out of the old Soviet bloc comes to an end. These are all catalysts that I believe are going to drive the uranium price much higher than where it is now. And that bodes well for our uranium co-products production. We're not becoming a uranium company, but we have significant amounts of uranium that we need to get value for.